The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us. We have the Dow Industrials down 150. You get the NASDAQ off 8. S&P's down 16.5. Gold contract up $3.60, trading at $12.99 an ounce. We had silver flat, $14.80. Silver still having a hard time getting any type of bid out here. Light sweet crude. Crude market down 38 cents, $61.40 a barrel. We had a build last night of 8 million. So We'll see what they have to say today.
All right.
Notes and bonds, folks. Bottom line. 10-year note up 13.6, 124.23. 30-year up 23 at 149.29. Now, both of those are going right after their March highs. They're right next to them right now. They are moving once again with volume. They look like they want to blow away this March high. We're at 2.36 on the 10-year.
Pretty cool, right? I was pulling up the chart in the same on the other screen, and quite a drop, man.
Look at that move from last night,
That's
man.
what I see. Yeah.
That is a monster. We went from 2.42, folks, down to 2.35.
Quite a number, man.
That is a fast move. King dollar up 168 ticks, trading 97.490. The euro is at 111.85. The yen is at 109.38. And the pound is out here at 128.34 to $1 US. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim. Folks, every trading day, 11 to 12 Eastern Standard Time. Awesome program. You want to understand option strategies, futures, defined risk. And you better get some defined risk in this market, folks. Just go to YouTube, hit TFNN. Great program every trading day. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. How we doing?
We're
Morning,
doing
Kevin.
good. Hey, it's, just blink and the S&Ps are either up 20 or down 20, man.
I'll tell you what, Tom. I think you're on to something here, and here's why. Bonds, of all the risk-off assets that we're talking about, right?
Yes.
So let's think about this. VIX. VIX is trading 18.5. You'd think it would be higher.
Definitely.
With the percentage moves that we're getting both up and down.
Right.
VIX should be higher. Now, you can say there's a seasonal factor in that may be working its way into the VIX. Gold. You would think gold would be higher, right?
Yeah.
Based on everything, but even with the dollar being higher is probably holding a little gold. But bonds are the risk-off haven that really looks like everyone is going to, and that is bonds for sure. Because guess what? Our 2.3, 2.3 between 2.3, 2.4 yield looks pretty attractive. Not only the U.S., but everyone in the world. Our bonds look pretty attractive right now.
It's amazing. I mean, and, folks, depending on how long you've been in the marketplace, I mean, I'd say that folks have thought the bonds are going to basically go down in price, up in yield for the last 7 or 8 years. And guess what? It's not even close.
Yeah.
It's a consistent factor. And when you look at some of these numbers out here this morning, like, you get the retail sales number a little weak.
Yeah.
We definitely don't have inflation, so the bottom line is that what is the real interest rate,
and we were down overnight. China's numbers, their retail sales and their industrial production both missed. So, it's going to be, that started the futures down. That being said, you're right, Tom, our retail sales were a little bit soft, but, when I look at our retail sales data and I look at last month's, up 1.6%. It's amazing to me the volatility in that retail sales number.
Yeah.
So.
Right. And this one came in with, it was a little light on the cars.
Right.
I mean, that's
exactly. Last month was real strong.
Yeah, and it's going to be wild watching this thing shake out. And what I mean, folks, is this: it seems to me that the economy is going good. There's still a cash flow out there, and I don't think that's going to actually change. I think that the variations are so dramatic that, yeah, the Fed will pull back. we know we're not going to get a raise in interest rates this year. That gives companies breathing room, basically.
You're right.
You know what I'm saying? That, okay, we can rearrange a few things out here, and it almost reminds me of, like, 1994, folks, okay, we got a debacle on the way down in the marketplace. That was a 6-week deal. By the way, when it happened, it only came down like 11%. But because we had gone up so long, that 11% was like a disaster then. Do you know what I mean? And then it got straightened out, and then the market went straight back up for another 4 years. Actually, longer than 4.5 years. So it almost seems like we're in that because the companies are still making cash hand over fist, man. I mean, they'll have a hard time making as much as they made last year, but the reality is that, it's not like people don't have any profits out here.
And Tom, what you said, and the way the Fed is, on the sidelines for sure right now, at bare minimum they are on the sidelines, I think that makes the rallies in bonds stronger and the sell-offs weaker.
Yeah.
Right? Because make no mistake, the Fed is on the sidelines and not affecting rates right now. So, I think that just puts bids underneath these bonds. And on weekdays, they don't go down as much as you think. And on weaker days where the overall economy shows some weakness, they are stronger than normal.
Yeah.
So all those things are leading to just, lower yields. I haven't seen 2.3 in quite a while.
I was in shock this morning when I just saw that. That was a fast move, folks. This is a really fast move. And, Kevin, I just brought up the Fed Fund futures, and, this thing popped over 50 again for September, 55.3 as a rate cut, not a hike. Okay, these numbers change quickly, folks. Okay, that's the reality. But that's a big number, man. September is only 120 days away.
I think they are going to be terribly disappointed because I don't think this Fed right now, as we sit here, is ready to lower rates just yet, especially when you're getting some of the data that we're getting. I just don't see it, frankly.
Listen, I agree with you. I mean, I think it would be so bizarre. Tommy and I were talking about this yesterday. Like, everything's gangbusters and what the Fed's going to go down in rates. It's like, I don't see it either. But it's like, we know how this thing goes, man. If that thing keeps crawling up, well, that's where it's going to get interesting about what the expectation of traders are versus what is really happening in the marketplace,
Yeah. Hey, listen, I agree with you. I think the big shift that the Fed has made is that they have basically admitted that their neutral rate has come down. Right?
Yes.
I think that's what we're all getting comfortable with. That being said, I cannot connect the dots between their neutral rate coming down and them lowering rates. Now with a 3.6 unemployment rate, I just don't see that, and I don't know what message that would send, but it wouldn't be a good one. Let's put it that way.
No, I agree.
I
know. And I think, Kevin, when we were just on, you must have been hitting those NASDAQ and S&P futures because the NASDAQ, was down. Well, the NASDAQ wasn't down, but it was only down 4 points, but now it's up 13, and the S&Ps, that was down.
Look at the E-minis just jumped.
They jumped 10 points, man. Yeah.
Remember, and this is, if we get one thing from this discussion, when we're weak on foreign data, sometimes that's a great chance to nibble and buy these things.
Folks, right here, 45 minutes from now, outstanding program. Kevin, you have a great day, safe day. We look forward to the program in 45 minutes.
Thanks for having me on, guys.
Thanks,
Kevin.
Stay right there, folks. Tommy and I are coming right back. We have the Dow down 68, NASDAQ up 11, S&P's off 4.5. Come right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow is down 78. You get the Nasdaq up 14. S&P's down 6.5. So let's see. So I believe with that little pop out there, you get Trump coming out saying he's going to delay auto part. Let's see what it's going to say.
Imposing tariffs on auto parts.
On auto parts. Auto imports.
Thank you.
Interesting. Yes. Yeah. Okay. So you can see ESM9. Let's take a look at this. So the E-minis.
There you go.
Yep, you were down at 28.15. That's quite a pop, huh?
Yeah, and even off that news, it was really more like 28.20, but nonetheless, I mean, you're talking about 15 to 20 points right off the. Yeah, and I'm just going to jump over to the currencies too, because that's what I saw. That the euro. I mean, look at this action. So we got the dollar index here. Just went from 97.70 and 97.50 in a heartbeat.
Yeah.
And yeah, the euro, which we saw jump positive as well.
Yeah. So there's still gonna be lots of action out here, folks. No doubt about that, man.
That's for sure.
Let's go take a look at some of the higher volume equities. Now, what we had out here yesterday is that you had a failure. Here, let me show you first. You had a failure on all the indices, on price and volume. And specifically, what I mean by that is that you had them get over the highs of yesterday and close underneath them. Like if we look at the SPY, the high of yesterday was 280. The high of the prior day of the downdraft, right, was 283.49.
Yep.
You did 127 million shares. Well, we got to 285.10, but yet we closed under the high of the prior day, and you had a contraction of volume. And that did it in the SPYs, did it in the I did it in the NASDAQ, and the Qs, and the IWM, all of them. So you had agreement that you had sellers, and you couldn't even hold that high, which is problematic, because that's, to me, is that now this is building cause to basically at least try to test the lows of Monday. And I suspect we're going to build cause, and that very well could be a B point of a very big ABC structure on the way down. And today, I think it's going to be a cause-building day. I don't see this market, basically getting any traction here. We'll find out, but that's how it seems to be.
Yeah.
Gold. We take a look at that gold market. Oh, that's right. We have oil coming on, too.
We sure do.
Okay. So gold is, you know, there's sellers in gold, but there's buyers, too, man. I mean, this is pretty intense that you have so many contracts, folks, and, you know, we've had movement. I mean, you know, that movement on Monday was good, you know, but bottom line is that you can see you're still into this supply line. This supply line is pretty big, man.
Yeah.
You know, where's that going over? Let's go over to January.
First of the year. Yeah. Yeah.
And we haven't had the silver move, so oil. Let's do some oil.
All right. So we got EIA inventory numbers at 10:30. Let me pull this over here. So it was interesting. That's what we saw, a spike. And I said, what just happened there, right? That euro, man. So pulling up crude. Crude trading at 61.33. We got EIA coming at 10:30, about 8 minutes from right now. I'm going to jump into these commodity spreads. We're going to jump into crude. Let's start off. Let's see what we have at 11 a.m. So again, the contract's trading 61.35. What's going to happen here is it looks like you'd have an option in at $61 to gain exposure. You'd have an option at $61.75. Unfortunately, that's right in the square middle.
Right
now, those are the 11 a.m., so we've been jumping around. Let's see where the noons got staggered. A little bit different. So 61.25 is going to give us a price point, which your bullish spread, now these expire at noon, $1.50 on either side, 61.25 up to 62.75. You're going to have 11, 12, 13 cents of intrinsic value, right? You have 13 pennies above the floor of that spread. So we're going to pay 13 bucks immediately just for the value. You're paying another 16, 17, give or take, for the premium. So 29 bucks on the bullish side, and bearish one, it's going to be the same amount of premium, pretty much, just minus the intrinsic value. So you're looking at 46. Yeah, till noon. Big. So you know, you just easy mentally. You need about 50 cents, give or take, from your price point to your break even. Now, if you're a little bit bullish, that's a little bit easier because you're already trading ahead of that. Let's just see where the dailies line up. $61, you could have exposure. Again, we're on the bullish side, and the bigger daily 61. So just keeping in mind, putting on, you know, trade possibilities, man. So you got the contract trading at 61.34. If you really were bullish, you wanted to place a trade before this number comes out, something that might be attractive is, you know, the price is trading at 61.35. Bless you. You lock in exposure to 66, you lock in defined risk to 61, and for that privilege, you're paying about 16 pennies above the market price. Okay. Right? So it's costing you $52, which is the 52 cents above 61. But of that $52, you have $36 that's value, you know, that you can sell it at. Not a bad trade when you got the inventory numbers coming out. You'd have exposure until 2:30. You want to be bullish for the day. Not a bad trade.
Yeah.
Yeah.
So we had some big numbers last night.
For the API?
Yeah, I believe it was CLM. I think we're somewhere around 8 million barrel build.
Okay.
And you can see, let's see. Is that where it come out? Is that 4 o'clock? Yeah.
Yep, right there.
So you had a little 61.75, 4 to 61.33. Nothing heavy, but
yeah,
you know.
Yeah, 30, 40 cents, right?
The thing that's intriguing here is that with...
Can you go into the CN before, or go to the chart, but just before you get away from them?
Which is, you know, with all the action over in the Mideast, it's surprising that oil can't catch a bid.
Yeah. You know? It's interesting how you have multiple factors, multiple variables in terms of you have the turmoil going on in the Middle East, right? You had possible drone attacks on infrastructure, right? You had possible ships getting attacked, but then you have the economy pulling back so hard that you have oil pulling back with it. So it's like one of them's pushing it up, supply concerns, the other one's pulling it back, demand concerns. So let's see what they're watching for here as we got about 5 minutes or less to look for. So oil stocks at Cushing, Oklahoma are an increasingly important area to watch. The prompt WTI spread has been in a stubborn contango even as global markets tighten. Let's see, in fact, second to third month spread, and third to fourth month spread are also now in a contango. The market is trading like there's going to be a lot of supply coming online very shortly.
So a contango, folks, is that it's costing you less in the future to buy oil than it is right now. So what happens is that even oil company, all of us can buy it right now.
Sure.
At a cheaper price.
Sure.
You know?
Yeah.
So.
Yeah.
That's normally saying that the supply is going to be bigger.
Yeah, and prices will be going down in the future,
Right.
which is why those future months are cheaper. Pad 1 gas inventories appear to be rising again, but they're still sitting well below the 5-year average. In addition, inventories are fairly tight for this time of year, despite the Memorial Day kickoff to driving season around the corner.
It's around the corner, too.
Man, it sure is. Bulls may have something to rejoice over in coming weeks. Refinery utilization, we keep seeing this one come up, and the Gulf Coast may see some declines for the week ending May 10th. Storms in Texas shut down a few of the Pad 3's largest refineries early Friday, an eerie reminder of Hurricane Harvey. For the week prior, Gulf processors used 92.1% of capacity.
That's still a big capacity.
It is, and I think they're saying you might see that one dropping too.
Okay.
All right, so we're going to break. We're going to come back, and we'll see where we end up in oil.
Our phone number is 877-927-6648. We have the Dow Industrials right now down 31, NASDAQ up 30, S&P's down 2.5. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. It's St. Patrick's Day. It's all green.
Oh, it is, sure. You lost me for a second, but there we go.
You get the Dow up 10, you get the NASDAQ up 47, S&Ps are up 4. What do we do with oil out here?
Yeah, I don't know if we have the number yet. Oh, there we go. We're getting some action.
What day? Let's see.
Oh, it's Wednesday,
Yeah,
and there's no holiday
no
Monday. I
holiday.
did it in my head. I mean, the
Okay.
reason why I say I'll bring it over, we haven't seen any action dramatically yet.
Right.
But let's jump back. Let's find where we are. Nope, that's not the screen. Do we still have the top live up? Well, we'll pull up the oil. Yeah, there we go. Oh, we got to build a 5.4. They beat us in the den. Gotta love it. There we go. Crude oil inventories rising 5.43 million barrels. Gas inventories falling 1.12 million barrels. Expectations had been for a gain of 2.65 for the Bloomberg Users Survey. Median analyst estimate, I think, far below that, but that probably changed last night with the API. But nonetheless, a build, and guess what? It don't matter, man. Oil hasn't even
moved.
budged. That is a very low volatility bar to the point where I said, are the numbers out, right? Because you usually say 10 to 15 cents direction in one way or the other, just as the market tries to find where supply equals demand.
Look at that, huh?
61.46 trading. So we'll see where we check back in, but right away we got nothing, man.
No.
That volatility trade wouldn't be paying off today so far, but sometimes that's why we like those noon expirations.
Oh, yeah.
This market takes a little while sometimes to, and like we went over, I mean, there's a lot that goes into that. Those what to watch fors. I mean, there's much more than just the headline there.
There
you
is.
know, where's the utilization? Where is the pad 3? Where's the demand, et cetera?
So S&Ps, you know, we hit 28.15 is the low. You're at 28.43. You know, it's going to try to get up into these highs of, what's that, last night, right?
It's right next to where
The
we're
high
at
of
now.
last night was
28.48.
28.48. We'll see if we can
Can you pull up the NASDAQ 100?
Yeah, NQ.
Because that was a solid 100 points, I think, from most of the indices made highs at about 2:30 in the morning last night. And yeah, I was going to say, I'm pretty sure it had clawed it all back. So I guess the high was probably intraday in the market, but yeah, maybe 74.50 was that. 74.59 that was. And we, I mean, we're now trading at 74.69.
Yeah.
And we went all the way. What is the low there? 73.53.
Right.
You're talking about 120 almost points from that low.
Yeah, and so what you're going to have here, now this is where the battle's going to come down inside this NASDAQ. The battle's going to be over the highs of yesterday, which is 74.59.
Okay.
Yeah, and you're, you know, $8 over it right now.
Yeah.
Let's go inside the NDX 100. We'll see the strength versus the weakness. So your strength is take two. That's up almost 5%. Biomarlin, that's up 4%. But guess what? I believe this has been a dog. Let me look at that again. Yeah, this has been a dog. So this is.
What did they just come up with? We can dig into it, but that's quite a pop.
It is. No, it is. I think this is
earnings or news.
Yeah, let's see.
No?
Not yet.
Yeah.
So maybe they're coming out with something though. Let's see. 7.25. I don't know.
Yeah, they're already out with their earnings.
Yeah.
Seems like, yeah.
Then you get Electronic Arts up 3.8, AMAT's up 3. Look at this, it's still going south. Mylan Pharmaceutical down 2.3, United off 1.4. There was another front page story today in the Wall Street Journal, folks, about Boeing. You got to read some of these stories. It's like disgusting.
Yeah.
I mean, it's hard to even comprehend. What they said in the Wall Street Journal this morning is that the executives weren't even paying attention to this plane. Like, literally weren't paying attention to the plane at all.
Yeah.
That was middle management that, you know, was basically responsible for, you know, safety features and all this. It's a crazy article, man. I mean, it's like, whoa, baby.
And so what do we have? The FAA before Congress talking about that today as well? I mean, I'm looking at these. I believe that's going on right now.
It had that in the article that this is going to come up because what happened is that this came out in a, I don't know if, yeah, I believe it came out, they're saying it came out in the investigation after the fact. Do you know what I mean?
Yeah.
But it's a pretty heavy article, man, that top management, bottom line, zero responsibility, you know, for this whole deal. And the middle management just put it on Boeing. So it's like, you got to be kidding me, man. I mean,
blame game, of course.
Well, I think for all of us, what will end up happening is like, oh my God, you know.
Well,
before this happened, I always, you know, Boeing was a great brand.
Yeah, I mentioned I was flying back from Boston Sunday night. My plane got delayed, and if this plane was in rotation, I would have looked to make sure that I wasn't flying on, and that wasn't a reason, which says a lot because you've never considered that before ever. So they really have some woes, as they should, because
Yeah, So if we go into the Dow, the strength versus the weakness inside the Dow Industrials out here, you get Visa putting 14 positive points, Microsoft 6, McDonald's 5, taken away from it, Boeing down minus 12, JP Morgan 5, Goldman 5, United Technologies 5, nothing really big out there. Let
me take a peek real quick back at oil. I just wanted to see if no action.
Look at that.
All right, 61.47, kind of hanging pretty close. We're at 61.38, I think, coming into that news, but
no action.
None.
Franco-Nevada. So let's take a look at Franco-Nevada. Now, Franco-Nevada, folks, is the strongest gold stock there is out here. They came out with their numbers last week. They were monster numbers, and we'll see whether this can make it to the highs. I mean, it's trudging all the way up into this level. You know, and your high out here is 86. You're at 76 right now. And you can see we've been in this level for a long time, man. The thing that's intriguing about this is that, I believe this, let me make sure this is the high, though, going back to 2011. Yeah, it is. So what's intriguing here is that, you know, we don't have gold at highs, but yet this is a streamer, and it's up there. It just shows that their business plan, you know, 26 employees, right? Where do you see the revenue?
Well, it's $14 billion company, too.
Yeah, look at the revenue.
Yeah, crazy.
You know, and it's all about, they make money on the gross proceeds. They don't have to worry about expenses.
Okay.
They don't have to worry about, you know, you and I
they have a
making an excuse saying,
price,
hey, we only did, you know, we didn't make any money. Well, their value gets over the gross value of it, nothing else.
I think we got a caller on the line.
Let's go to John in Greenville, Maine. Hey, John, what's going on?
Good morning. I'm a first-time caller.
Well, welcome to TFNN.
Question and then just listen to your answer. I'm looking at the S&P and the NASDAQ as far as daily charts and trying to get an understanding of how these news items, like the Mnuchin item that came out about a half hour ago, puts the market back into like a hourly uptrend versus whether or not it really is in an uptrend. That's the question.
So, you know, markets in general, right, basically move up and down on a continual basis. You know, where, you know, if we talking trends right now, I mean, we've been in a downtrend for a couple weeks. You know, on a short-term basis, on a long-term basis, there's no doubt that the S&P has been on an uptrend. You know, here, stay right there, John. We'll talk about this. It's a great question. That's the real bottom line, because volatility inside the marketplace is something that you have to see a few times. You know,
and on those different time frames, things change, right?
Yeah, they definitely change. Stay right there, folks. Tommy and I are coming right back. We have the Dow right now up 11, NASDAQ up 43, S&P's up 2. Come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow Industrials up 16, Nasdaq up 59, S&P's up 3.5. Let's go over to our man, Mr. Teddy Kegstad, as we do each and every Wednesday at 40 past the hour. You can find Teddy every trading day, folks, at forex-trading-unlock.com. You want to understand currencies upside down? Great website for that. Teddy Kegstad, what's going on, brother?
Oh, do we got him? Maybe, Teddy?
No.
There we go. We got you. Good morning.
Oh, you do? Okay, good.
Hey.
Mixed basket of goods in the currency markets today.
Yeah, you talk about some moves in the currency markets, right?
Yeah, well, we have the Brexit information that's really pounding the pound, no pun intended. So the news about the Labour Party that really doesn't want to participate in the June vote is probably not, I would say it's probably going to make this little bearish break slide into next week until they can balance out that news.
You know what's amazing is that I was saying to Tommy yesterday and the day before, like, we were talking about everyday Brexit for like 2 months, and then all of a sudden it's off the table. It's like, okay.
You ask and you shall receive. It's back on the
exactly.
table.
I know, man. It's just it's wild in general.
Yeah.
Right. I think that's really what's driving the pound right now. So, because right now there's a lot of other news that's affecting the dollar, but the pound right now I think is really just weighing on that. Obviously, the Brexit vote issue has come back, and especially the Labour Party withdrawal. I think that's a negative. So, but then I think what you really have to look at now is with the dollar, it's kind of mixed. You have the euro is actually kind of positive, but all of your Asian trade zone currencies are getting hammered, like the U.S. dollar, yen,
yeah,
as well as the Australian dollar, New Zealand dollar, and most people don't talk about the Chinese yuan, but the yuan actually is falling out of bed too because of the economic numbers.
Yeah, we're getting close to 7, right?
Right. Now here's where I have to say that you might see a China trade developing with that, because we all know that the Chinese fix all their numbers and they fix their economy. Everything is set in stone. Like today, they know what their fourth quarter GDP is going to look like for 2 years from now. You know, so that being said, because their currency is now in play, I would assume that you're probably going to have some sort of price fixing maneuvers happening on the Chinese trade zone besides this tariff, stuff that's going on.
Okay.
And if that happens, once the yuan starts sliding, you might see a little bounce in the yen as well as also the Australian dollar.
Yeah, you know what's so interesting, man, is that I actually just came back from China about a week and a half ago, Teddy, right? And what blew my mind is that their largest bill is 100 yuan, which is only $12. You know, it's
Right.
like, wow, man. I mean,
Can't control the economy if people can hide cash.
Yeah, no, it was really intriguing.
Yeah,
man.
no,
just,
right.
just in general.
Definitely.
You know, as
Right.
to
Well, you know, that's actually a big deal in China because they just had today there was some breaking news about, I think it's some fund manager or something, about sales expenses. And that's one of the things what Chinese executives do, because when you're in China, whatever province you're in, you're not allowed to make more money than the magistrate. So one of the ways that they hide things is they do it through their sales expenses. It's a way of laundering money out of their own companies to themselves,
Yes.
if you will. So, and that's all breaking news again about another person who's doing that. So.
yeah, I wouldn't
Pretty
want to get caught doing anything over there. I can tell you, it was really safe, but it was like, I think it's so safe because you don't want to get caught doing anything because you just disappear.
Sure.
Sure.
Totally.
Well, I would think that walking around in China is like walking around in Moscow 30 years ago, you know,
Yeah.
or 35 years ago.
I would agree. That's how you should at least view it, especially as a foreigner. As, you know, that they're in it for the long haul, as in.
Oh, listen, the business is amazing over
Yeah.
there. I mean, you know, if they are growing by leaps and bounds, and the amount of construction and engineering and production you see is just a mind blower. There's no doubt. You know, the real question is going to be, does that yuan get over 7? You know, because when I was there, which is only 2 weeks ago, it was 6.4. It's 6.9 this morning.
Okay.
You know,
Well, if
huge.
the Chinese want it to be over 7, it will be.
I'm sorry, what?
If they want it to be over
I
7,
said
it will
if the
be.
Chinese
Oh yeah,
want it
no.
over 7, it will
right.
be.
Right.
So, but another thing I think your listeners should look at is the U.S. dollar Swiss trade.
Okay.
That breaking market, just like the yen, is it's trending in a way that it's pounding some big lows. And if that momentum can continue, it'll be really. There could be a nice. You should probably see a double size of the move that's already happened to the downside.
Yeah, we had pulled this up right before you came on because we know we like to pull this up. We talk about parity, right? We're just above that level,
Right.
kind of. But man, we were up there at 102
Yeah, look
not
at
that long ago.
Right. And the funny thing was, up until this recent move, every time the Swiss got above parity, or excuse me, the U.S. dollar Swiss, it would fall back below parity. This was the first time in months that it's actually been able to hold, and the way it's selling off.
Yeah, you know, I've been, of course, between the dollar staying at high, gold did break topside, but the silver market's having a tough time, man. I mean, there's zero bids in silver, so it's like, okay, is it because of industrial metal? They're going to separate it, and I've been doing this a long time, and I've never seen it that separate. Do you know what I'm saying? That's okay. Normally, when the metals are going, silver and gold will go together. So I guess the market is out on this just yet. And
Sure.
that dollar's been hanging tough since last October, right?
The dollar's been very, very strong. Absolutely.
I can't
and now
hear it.
here's
Do you
another
hear
thing that breaking news today about this whole Iran-Iraq thing that's going on right now. The fact that we made the announcement today that all non-military people, U.S. people, are to leave Iran or Iraq rather.
Yeah.
That means you probably have to think that we are actually going to have they really believe there's going to be some sort of military conflict that's brewing. So, and that being said, you're going to have a flight to quality in both the U.S. dollar as well as probably the 10-year note and the 30-year note as well coming up over the next few days.
Oh, that 10 and 30-year note, man, that's gone to the moon. There's no two ways about that, man. That drop last night was pretty intense. I mean, and Teddy, of course, you're in Chicago, so what ends up happening, and what I mean by that, folks, is that there's so many bond traders in Chicago. I mean, I remember when they opened that big bond pit, and then, unfortunately, that's when electronic trading came in, and there was no one in the bond pit. But it's amazing, that for how long, you think interest rates are going to basically go up versus down, and this has been down for a long period of time, man.
Sure, absolutely. But I would definitely pay attention to the news in the Middle East right now, because you normally, bombs go flying and the markets don't move. But when you start saying that you want to withdraw all non-military people from the United States out of a country, that kind of means something.
I agree. People better be paying attention. And you have those reports of 100,000 plus troop plans and so forth. So
crazy Bolton, man, he's out of his mind. So that's
exactly.
Yeah. Not good.
Just doesn't end over there.
Yeah, not good. Listen, folks, you can check out Teddy every trading day at forex-trading-unlock.com.
There we go.
Teddy, you have a great week, safe week, and of course, we look forward to speaking to you next Wednesday.
Absolutely, guys. Thank you very much for having me.
Thanks so much,
man.
Teddy.
Thanks for the update. Appreciate it. Yeah, so that's why bonds are probably moving too from that announcement last
There's
night.
a lot of variables.
That's why they could have dropped so quick, because that's pretty intense, man. You know, it was a big drop.
Yeah.
Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials up 20, Nasdaq's up 57, S&Ps are up 5. Come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Oil.
Checking back in, it's getting a little bit of a bid. 61.88. When we're checking out that number, is at about 61.37, give or take, coming in.
Yeah.
One of those trades we looked at would have been 61.25, right? Now we said that was going to cost us about $50. You had till noon, but you had a little bit of a head start to the upside.
You did have a head start,
and as
right.
you can see, you needed 50 cents. 61.75 became your break even on the upside. But surprising thing is, we got to build.
Right.
Why are we getting higher prices, man?
Right.
But you got a lot going
Right.
on in terms of, we just saw demand issues, so we'll see what happens.
If we go back to the question John had about the S&P, so in a volatile market, what ends up happening, John, is that you're going to get bounces and they're going to be vicious. And most times they do come in with some type of news announcement, you know, and my take on that is that, yeah, you get the news announcement to bounce it, just like this S&P, you're up $7. that's not a big deal because it's not even over the high of last night just yet. Do you know what I mean?
Sure.
So you're in a shorter-term downtrend right now. You have volume off the highs, and as to how to trade it, you can either use Fibonacci numbers. Bottom line, thinking that, okay, you only can get down so far. You're going to get bounces in the marketplace, and you're going to see if they get over those numbers. So
Yeah. No, just to add to that, if you're trading super short term, then what's it doing very short term, right?
Right.
How long's your trade in terms of, if you want to trade short term, that's a heck of a pop on that news that you can consider it a short-term rally for sure.
Oh, yeah.
But if you're making a trade for 2 weeks, 3 weeks, well, geez, we'd just come straight down for 3 weeks. Well, if you're making a trade for 2 years, we haven't stopped going up for no time in context. So keep that in mind when you're looking to make those trades in terms of what's your trading horizon and then what's it doing on that horizon. And it's always nice when they all line up, though, regardless of what you're doing, right?
That's right. And you got to pick your spots.
Yeah,
That's the real bottom
There's
line.
always not a trade, sometimes, right?
You got to pick your spots in a big way.
You don't have to be confident one way or the other all the time. You can say,
we'll see how this shakes out, but to me, this is a building cause for an ABC down. And where the qualification would be that if we bounce again today and we have light volume today, that's another indication that bottom line. And so you're going into 103 million. This would have to do more than 103 million and close over 283.30.
Okay.
We're over it in price. Stay right there, folks. We got Fast Market coming up next, and we get our man, Mr. Basil Chapman, Steve Rhodes, Dave White. Be back this afternoon. Thanks, pal.
Thanks, man.
Look at him, folks.